Hi, and welcome to the Stockscores Market Minutes for May 30th, 2014. Let's talk trading economics. 80% of your profits will come from 20% of your trades because you see, no matter how good you are at trading, at the end of the day, we're all still guessing about where stocks are going to go. Out of 10 trades, I expect 3 or 4 small losers, 3 or 4 small winners, and then 2 to 4 of the bigger winners that ultimately generate most of the profit. Traders fail because they let small losers turn into big losers, and they don't allow those big winners to happen. They sell the winners too soon. Now, looking at my own week, it was, to be quite frank, a fairly lousy week if you consider the success rate. I made 12 trades last week, and only 3 were winners. 5 were somewhere around break even, either slightly up or slightly down, and then there were 5 losers. What stands out, however, is that the average winner was 4.3 times larger than the average loser. And so despite having a losing percentage, I still made market-beating profits for the week, notching a gain of 4%. It's this approach to looking at the big picture when you're trading and judge your success by a large number of trades that is so essential to trading success. Now, this was a bad week. There was only 3 winners, and yet at the end of the week, I still had profit, and that made the time all worth it. All right, let's get into this week's market analysis. Here's a chart of the SPY, which is back in that upward trend after 2.5 months of sideways trading. We've continued to move higher. Volume very, very light. There's not a lot of enthusiasm to this upward trend, but it is still a bull market. The Toronto Stock Exchange has pulled back to its more steep upward trend line and looks to be bouncing off of that trend line. It wouldn't surprise me if we break down below that and move back toward that longer term upward trend line, which is the lower green line that I have here on the chart. But either way, the bull market is intact. TSX Venture is trying to turn around. You can see it broke its downward trend line in December, had a good little rally through January and February, and has since been drifting lower, although there's not a lot of enthusiasm among the sellers. We want to watch this chart for a move up through that downward trend line as a sign that this market is getting going yet again. The U.S. Treasuries have rallied, and this has really been the story of the last few months because no one expected U.S. Treasuries and the bond market to do well in an environment where the U.S. Federal Reserve is tapering their bond buying program. Well, that rally is likely going to stall here. You can see that it tried to break the downward trend line this week and failed. It pulled back to close just at the downward trend line. Now, certainly it could break it, but what's likely to happen is a little bit of a pullback first and maybe a retest of that trend line and make a second try up through that resistance level. US dollar has broken its downward trend line. I did that last week. It's still a pretty bearish pattern. That's actually not that bearish because it's what we call a falling wedge, where the tops are falling quicker than the bottoms are falling, and that's a sign that the sellers are getting tired. What we need to see, however, is now a break from a rising bottom for the US dollar, but the market is certainly speculating that the US dollar's pessimistic run is running to a close. Gold market had a pretty important breakdown on the short-term chart this week, and if you're looking at the daily or the weekly chart, you're probably feeling pretty bad about gold. I'm bringing up the longer-term monthly chart going all the way back to 2005 because it shows that we are still above that long-term upward trend line on gold. So yes, the weakness looks pretty ugly right now in gold, but don't despair just yet because it could still bounce off of that long-term upward trend line, and then we'll see if it can break the downward trend that I've drawn in green. Now, remember, this is a monthly chart, so a lot can happen next month. It might take 2 months before this reversal happens. This is not a short-term outlook. Oil market rallied up to resistance at that downward trend line. This week it stalled there, as we would expect. Yeah, it could break through on the balance of probability. I think it probably stalls here for a few weeks and certainly could grind its way back down toward the upward trend line on the bottom of that pennant pattern. So I'm neutral on oil right now. I don't really see anything wrong with it, but at the same time, the resistance is not something to be ignored. The VXX, which is the VIX short-term futures ETF, at unbelievable lows, really showing a lot of complacency among investors in the market. No one is really too worried about the world, the financial world falling apart, and that shows in the performance of the VIX. So my ratings bullish on both short and long term for the US and Canadian stocks. US is looking better than Canada this week, as Canada has had some profit taking in the energy sector, which was a pretty hot place to be the last few months. Gold neutral long term because we are at that long term upward trend line, but bearish in the short term. There's certainly been a little bit of panic selling in the gold market this past week. Oil neutral on both accounts. Equities continue to drift higher on very light volume, with money moving from one sector to another. The constant has been yield. Investors are clearly looking for safety of capital. Gold is suffering in the short term, but a long-term bullish support line should help the gold market. Oil is at resistance, making it likely that there will be a pullback in the short term, although there is no breakdown yet. Well, that has been the Stockscores Market Minutes for May 30th, 2014. To subscribe to my free weekly newsletter, go to stockscores.com/newsletters.asp. Have a great week in the market and trade well.